governance is to, in many ways, help provide confidence in the system. Regulatory is slightly different. It's to ensure the sustainability of the system itself. So they're both actually, the common ground is, in my view, trust. Why should you have trust in these institutions? I think what we are doing right now is reimagining our financial systems, our systems of trust, which have traditionally been centralized, right? When you have a traditional, primarily by product view of confidence management, trusted institutions. So for example, in Hong Kong, for dealing with securities, you have the SFC. For dealing with issues to do with money and banking, you have the Hong Kong Monetary Authority. To deal with things like anti-money laundering, you have customs and the police. And so they're quite siloed and sort of vertical. Whereas a lot of the innovation now is horizontal, which in other words are cutting across. Are these new smart contracts which combine monetary elements with securities elements? Well, how do you regulate that, right? When it crosses boundaries, typical regulatory boundaries. And so when you have, in some sense, a regulatory, crossing regulatory borders, then we need to think of new governance models to reimagine the governance objectives and the regulatory objectives. The good news is that the regulatory objectives don't really change. It's just the mechanism. And so just as in the interest group we have the different views from the regulatory to technical industry to banking, sharing and having a dialogue of, hey, how do we figure out this stuff? And so these are policy objectives, these are governance objectives, and you want people to basically comply with them, especially in places like Hong Kong. I don't actually believe we need new regulation. Right? I think our regulations work fine. I think what we do need is to make it easier for startup companies, specifically in fintech, to comply with them. Furthermore, give them 36 months to meet those obligations. And they are obligations. I mean, these regulations are there for good reason. Again, talking about sustainability of the overall system, so that the whole system doesn't fail when an individual company, which becomes systemically important, fails. The interesting thing here is that these fintech companies go from zero to hero in the matter of months. And if you look at sort of the what's called internet finance in China, which in many ways can be viewed as the Wild East, you have these companies that appear to be financing companies go from nothing to being relatively huge relatively quickly. And so how do you regulate it when the regulator and the governance, we're actually not quite sure what we're looking at? And so the SCI is again an example of trying to frame the discussion, in terms that lay people the community can understand. So the genius of Hong Kong is, I think we have the vision here. We have people who are very experienced regulators who have a light touch, who realize that, for example, you don't change the laws every day, every week, every month, right? Laws are there to provide legal certainties, that people have a level playing field within which to operate. At the same time, we're mindful of regulatory arbitrage, right? Of places that don't have as firm levels of trust as Hong Kong. We don't need to compete with these people. We have our standards, we have our sustainability. Hong Kong, unlike places like Singapore, and we have Chin Hoi, right? This special area between Shenzhen and Hong Kong that we can innovate, that we can experiment, but in fact purposely designed for doing so. So as the RMB becomes more internationalized, the question is, to me, how can online trade be settled in RMB? And how can we use to meet the various different objectives? How can we build new infrastructures as perhaps envisaged by the AIIB and also by this ASEAN free trade area? How can we do that? The benefit here is that in Asia we have 23 different systems, 23 different jurisdictions, and they're not interoperable, right? There are different local regulatory concerns, and that's absolutely fine. What we've learned from the internet is we need to find common ground areas that we can interoperate. So for example, reducing the cost of remittances, when what you're trying to license is in the order of a few cents, or rupiah, or what have you. The cost of routing money internationally is through traditional systems such as the traditional payment networks. There is an associated cost, but we've got the internet now. And so how can we use the internet when these technical companies like Google, like Apple, are entering, like Alibaba, entering the payment space where they're very, very accustomed to innovating very quickly. When they come into payments and payment space, when we start talking about the trading of intangible assets, that does require places like Hong Kong to say, hey look, what's the opportunity? How can we reimagine the value proposition? What's important is two things really, the trust in the system and the stability of the system itself. And that's no different from traditional governance objectives and traditional regulatory objectives.